Well, you just wonder whether that jump in the oil price, though, will change the inflationary expectations of the Reserve Bank when it makes its latest interest rate decision tomorrow. Markets expect after 10 consecutive rate rises, they'll be left on hold. But the fight against inflation clearly is not over yet. So let's bring in here Warren Hogan, independent economist and an advisor to the small business lender Judo Bank. Warren, as always, thanks for your time. The Reserve Bank may leave them on hold. What do you think they should do, though?
Well, I think they should go 25 basis points. The data is continuing to print, reflecting an economy that's still got a lot of momentum. And, of course, the inflation numbers last week were off a little bit, but there's nothing new in that. We know that inflation's peaked. But it's about it coming down quickly, and it's not coming down quickly. Well,
the annual inflation monthly print is 6.8%. The cash rate is 3.6%. So even if you took a 1% off it and it was 5.8%, you could argue it's still a long way away from where the cash rate is. That's the issue for the Reserve Bank.
We've got deeply negative real interest rates. That is interest rates minus inflation. And as you can see here, this is a shorter-term momentum of inflation. That is the 4-month changed annualised, and you can see it's only just drifting off. Inflation is not collapsing. It's not free falling. And of course, the other one there's rents. Rents is in the CPI is everyone's rents, but we know that advertised rents are increasing more like 10 or 15 or 20%, depending on which market you're in around the country. That will filter through to the CPI. Inflation isn't in free fall in this country. There is no assurance it's going back to target quickly. And I think they still need to take out a little bit more insurance by raising rates tomorrow.
OK, but then what the Reserve Bank has done is pushed out its forecast of when inflation will get back to its 2 to 3% band. It's pretty easy to sit there and go, oh, well, it won't be this year, it might be next year, or it might be the year. That's the guessing game. That's the problem. That's part of the reason why the Reserve Bank review is underway and in the hands of the Treasurer right now.
Yeah, look, to that point, though, the Governor did say in his speech after the last meeting, in the Q&A, he said that the inflation coming back to target in early 2025 is as far as they can tolerate it. They can't keep pushing it out. I mean, the proof will be in the pudding, but that's as much tolerance as they've got. And there's nothing that's happened since that tells us it's happening any quicker. If anything, all the risks point to inflation remaining sticky. And, of course, we're seeing that overseas. In the US, inflation sort of seems to be stuck in the high 4s, 5%, very high. So I think that they really have got to get on with it.
OK, do you want to know the reason why I think they're going to actually keep the rates on hold tomorrow? And that is because the Governor is addressing the National Press Club on Wednesday. Of course, this is where he controversially didn't do that and went off and did the Barrenjoey briefing earlier this year and got into strife for that. He's now doing this on Wednesday. Now, normally he doesn't go and do those types of things unless there's some sort of a change in the policy or the message. My gut feel is that there's a change in the message, and that's the reason why I get a sense they're going to keep them on hold tomorrow.
Well, look, I think whether they raise by 25 points or raise by 15 basis points, they could do that, or hold it. The message on Wednesday is going to be the same. We're pausing now. And I totally agree with that. I think there's enough in the system. I'd like to see one more 25, but they're going to send that message. They're going to sit and watch all through our winter. And, you know, a lot of people are going to read that as a peak in the rate.